Welcome to another Market Matters weekly video update. It's the 25th of August. We're in the thick of reporting season at the moment, and that's what's going to be the bulk of our conversation today, James. But kicking things off, we made a couple of moves across the growth portfolio this week, the flagship growth portfolio. Do you want to run us through your thoughts on those, James?
Yeah, we did, Harry. You're not wrong. We are in the thick of reporting season. We had a huge day yesterday. We're having another huge day today. The flagship growth portfolio made some changes this week. It's the only portfolio we've changed this week. I wrote about a couple of other potential changes in the portfolio report this morning, largely around our international portfolio. But the ones we've done this week was we liquidated Lendlease. More around using that as a funding vehicle to buy Independence Group. Independence Group is a nickel lithium company that's doing particularly well. So they had a reasonably large pullback in the lithium space. So we added a 4% position into, or 3% position, I should say, in IGO this week. We also topped up Santos. We flagged Oz Minerals as a buy as well. We were hoping to get that sort of sub 20. And that was stubborn again. So a few tweaks just on the Lendlease. We will revisit that at the later stage during the year. Just coming out of their results, they guided really to an improvement in FY23 rather than FY22. So that's the reason why we saw no catalyst over the coming 12 months for that stock, and we liquidated it, Harry.
Definitely. So reporting, we had one pretty big disaster yesterday. So we're going to kick off with the misses. Monadelphous MND, that was smacked yesterday. It's recovered a little bit today. Mining services business got hosed. What's your thoughts on that one? Are you sort of worried about that one going forward after that result, James?
Yeah, it was definitely a miss. I don't know whether it was a disaster. We've got a 3% weighting in it. It was down 15% yesterday, and it's rallying up just a bit over 5% at time of recording today. So they came out here with it. It was a bit of a strange result because they had really strong top line growth. So their revenue line was a lot better than the market anticipated, about a 6% beat in terms of the revenue line, but their profit was lower. It was about a 13% miss. So when you've got top line growing at a stronger clip than the market, but profits declining more, then you've got margin issues. So that was the case with Monadelphous. The original commentary coming out of the company was all around labour costs. So hard to get skilled labour. They've got to pay more for it. So that obviously hurts margins. When you reflect on it overnight, and there were some other, I guess, anomalies within that result too. There were some R&D expenses, some tax expenses, and some labour pressures. So it was a combination of all three. Wasn't as bad as what the 15% decline yesterday implied it was. And they also guided to sort of flat revenue or revenue slightly down on FY21 in FY22. So all up, not a great result. We wrote today that we prefer NRW. So we may we haven't done it yet, we may still sell Monadelphous and just retain our larger position in NRW Holdings, which didn't have that margin pressure. And that's why they rallied 20% on their result, Harry.
Yeah, it was very surprising. NWH rallying, MND falling. Another miss out today, Bravura, BVS. That had a difficult result. My read wasn't too bad a result. It's been hit about 16% today though, and their second half was really good, but their guidance is poor, James. Do you see that one sort of recovering out of here?
Yeah, so pretty as you rightly make mention, Harry, that everything was in line in FY21 with market expectations. The guidance for mid-teen profit growth in FY22 implied profit for the full year in FY22 of about 38 million. The market was sitting just shy of 42 million, so it's about a 10% miss or thereabouts. The market whacked it early, down about nearly 20% early on today. It's now down 15% or 16% at $3.15. So they talked also about the CEOs changing. The Chief Technology Officer is stepping up into the role of CEO, so that that the CEO, the existing CEO, has been there 10 years. The CTO has been there since 2007, so pretty orderly transition of CEO. So it all came down to guidance. I think the commentary that they provided, particularly around the UK, this is a business that really generates a lot of their earnings coming out of the UK. It's a software business involved in the wealth management superannuation space. I see the trends that happened in COVID offering a structural change or an acceleration in the shift more towards software solutions, cloud-based solutions, software as a service, etc. So I actually like it here. I think it's cheap. It was a miss. It's rightly getting punished, but it should be down about 10%, not 20. And then, I think the next 12 months will be better than today's pricing implies. So I like it here. I bought someone open today. Just for myself, if I held it, I'd continue to hold it.
Definitely. So looks a bit conservative on their guidance for mine there, James. HUB24 HUB had a very good update out yesterday. It's now pushed on into all-time highs today, James, well over $30. It was at one stage this morning. Your take on here? I know you spoke to management today, James.
Yeah, it's trading at $30.16, up another 8% after a pretty solid day yesterday. I've just come off a call about half an hour ago with Andrew Alcock and Katrina Shanahan. So Andrew's the CEO, Katrina's the CFO. And I guess a couple of key points that comes out of HUB. It's all about growth. So growing funds under administration, FUA, and doing it at a margin where you're not you're pulling your pants down to just get growth for growth's sake. So on those two aspects, why the market's got really bullish on HUB after this week's result is they came out and they've guided to FUA for FY22 of 63 to 70 billion. So the prior guidance was 43 to 46 billion. So there's a huge increase in guidance. The market wasn't at 43 to 46 billion. The market was at already sort of low 60s, but now they're guiding 63 to 70. So it's a step change in the growth rates for that business. They're doing it whilst maintaining margins. Margins were lower. That's to be expected. And just the key takeout from the call that I came off is that they are going to invest more heavily in technology. They are going to invest more heavily in their sales function over the next 12 months. So that is going to put some, that is going to lead to higher costs. But growth is phenomenally strong. They typically under promise, over deliver. So this is a huge growth opportunity for this independent platform space. The other thing I'd touch on, Harry, is just around market share. So right now they've got just shy of 4% market share. If they get to their FUA targets, they're going to have market share somewhere between 6 and 7%. One of the questions put to management was around, where can they get to? So as a guide, back in, when platforms were all the rage, from the banks, the large banking platforms had market share sort of circa 20%. And that's when the majority of banks all had platforms. Now they don't. It's a more fragmented industry. So HUB can, it shows you a trajectory that HUB could get to over time. So remain bullish that stock, Harry. Yeah, definitely. Like you said, under promise, over deliver. Known for that one is HUB. It's buy now, pay later day today, James. We've had Zip and Afterpay. We've held Zip for a while. It's probably our favourite in the space. But chat us through Zip's result today. Yeah, so full-year results out for Zip. They're pre-released pretty much in terms of their financial metrics. These guys are all about doing quarterly updates and showing the incremental growth on a quarter-on-quarter basis. But had a call just about 20 minutes ago with Peter Gray from Zip. So the key takeaways for mine, there was obviously talk about growth, competition, and market opportunity. So growth, Zip is still guiding, or not guiding, but implying that they're going to grow year on year at 100%. That's a really, that's a big target because they're coming off some really strong growth in FY21, but it's still a target they're comfortable with. Competition, obviously, Afterpay tying up with or merging, being taken over with Square, that's a big competitor. Zip's response to that was it opens up so many more markets for them. And ties in the opportunity that is in this space. So, I mean, they firmly believe, and I can see this as being correct, is that it's such early stages in adoption of buy now, pay later. It's not a case of buy now, pay later companies cannibalizing each other. at this stage. It's about buy now, pay later being a legitimate payment mechanism and taking market share from the incumbents in more traditional areas, credit cards and the like. So I think it's really plausible. They talked up, the first quarter, I think, is going to see some really strong, interesting strategic updates from Zip. So I know there's a lot of concern around this rising competition, but I sort of came off this call thinking more about the size of the market being phenomenally huge, and Zip is pretty well positioned to attack it. So I came off the call more bullish than anything, Harry. Which is that's companies are designed to do that when you go on a call with them. But to me it's a positive update, and then we look to the first quarterly sales update in the next 3 months. And importantly, that the insight they gave today just in the run rates so far in FY22 is really strong growth, particularly coming out of the US. Transaction value is up 240% on the comparable period. So that's really strong, and it's going to be well above market expectations if that run rate continues.
Yeah, definitely. Still a long way to go in the year, but off to a flying start is Zip. On the spot now, James, what are other results have you sort of picked up that's caught your eye this period?
You mentioned WiseTech. They were up 50-odd% today. You don't know why? I'll put you on the spot, Harry.
Well, no, it was a good result. It was a 5% beat at rev. It was 5% beat at EBITDA. You can't really fault the numbers. But in terms of seeing stock up 50%, it's hard to put two and two together. We spoke about before the call. We spoke about the short position in WiseTech, and it's not really there. It was sort of sub 1% coming into the result and falling. So you can't imagine that there was a huge short squeeze coming out of that one. Guidance was pretty strong. They're looking for EBITDA growth of circa 30%. I think it was 28 to 30%. 35% was their range. They're targeting, which is bullish. But I think it sort of comes down to the volumes. If you look past a year's time, shipping will be up and their costs are down, so their margins should explode. So we should really see that drop down to profit.
I think that's a key result. That's a key thing you just touched on. So a lot of companies through COVID have had to address, perhaps they've got unsustainable cost bases, perhaps they've got, mediocre products that sort of, need the hard decisions made. So COVID has actually incentivized management to make hard decisions, strip costs out of the business, get leaner, etc. And I think a lot of them will come out of COVID in a lot better shape. Bravura actually made that discussion in today's update as well. How they look like going forward. I think just on reporting, you asked me, what's catching my eye further afield. Reporting generally, I think there's this reluctance from management to issue any concrete guidance. So we've seen less guidance being issued, but they're also saying that FY22 has started in a really good fashion. So, to me, I'm confident coming out of these reporting results. Obviously, FY21 numbers relative to that weakness in FY20 are really strong. A little bit of reluctance to provide forward guidance, but they're all saying FY22 started in a pretty good fashion. So, to me, and we're starting to see in our portfolio some of those beaten down reopening trades starting to perform a little bit. So I'm looking at not Oz Minerals, A2 Milk is sort of that beaten down trade. It's up 4% today. Qantas is up 5% today. So some of those more beaten down plays are starting to run. Crown's up another 2% today. So, and you've seen some big moves in the emerging companies portfolio, and we haven't even touched on the others. So I think we've covered enough today, Harry.
Yeah, definitely. Thanks for joining us, James.